Hello and welcome to Blytheway Business News. Today I'm joined by a newcomer to the programme. That's the Anexo Group. Anexo listed on the AIM market with a market capitalisation of around £153 million sterling and a ticker of ANX. I'm joined by Alan Sellers, the Executive Chairman, and Mark Bringloe, the CFO. Gentlemen, welcome. Alan, can I start with you? Can you give viewers, you are new to the programme, viewers a very quick overview of Anexo and what you do, please?
Of course, we're essentially a one-stop shop for the victims of non-fault road traffic accidents. So we cover motorbikes, cars and vans. But where we're very different is we look after clients that are known as impecunious, i.e. don't have any money and are typically third-party fire and theft insurance. We look after their interests because they're essentially vulnerable road users. And there are two main divisions of our group. There is Edge, which is the credit hire business, and Bond Turner, which is the legal services business, which recovers the Edge hire repair monies.
Thank you. Now, I'm going to turn to you, Mark. You've just announced the full year results this morning. Walk us through the highlights, please.
Absolutely, and thank you very much for the opportunity. So revenues increased in what has been, for very many people, a really difficult year with COVID impacting very many businesses. So revenues were up just over 10% to almost 87 million in the year ended December 2020. And that growth covered both the credit hire business and the legal services business. So credit hire really, as Alan described, provision of vehicles. The average number of vehicles on the road for us increased from just over 1,450 to just over 1,500 year on year, which is a fantastic result given all the lockdowns and the difficulties we faced. Bond Turner generates its income really from cash collections from those settled cases. And settled case numbers increased from just over 4,900 to over 5,200, which was, again, a fantastic result given much of the courts were closed during the period, trying to work as we are today with Zoom to try and get hearings heard, but in many instances, just creating more of a backlog for us in terms of collecting those cash positions. Whilst many people have furloughed staff during 2020 in these difficult times, we found that a great opportunity for us to continue to invest in those legal services staff, those people that settle cases, generate cash for us, and bring in the value and revenue and profits for the group. Senior fee earners, as we term them, those guys that settle and negotiate with insurance companies, increased by 14% period on period, finishing up at 145 staff, which was an increase of 27 period on period. And that increase, obviously, we're going to face increased wage costs. An increase that year was just over 3.8 million, obviously impacting our reported results. We write all our expenses off as they're incurred. We don't carry anything on balance sheet, trying to be as conservative as we can be. Those staff really had a fantastic impact on cash collections, increasing to almost 98 million in the year, an increase of 16% on the prior period. That's allowed us really to continue our investment in the VW emissions case. And Alan's going to talk a little more around that in a second. We incurred costs of around 900,000 in 2019 and up to 2.9 million in 2020. Again, that additional 2 million counters some of the reduction in profitability you've seen from our reported results today. That spend, though, has generated almost 15,000 claims for us. So, as that case moves forward and settles, we only recognise cash and revenue for that case on cash settlement. Should be a significant windfall for the group and our shareholder investor base. During 2020, with all the uncertainty, we continued to strengthen our balance sheet. We raised just shy of 7 million in May 2020 from the issue of 6 million new shares to a number of new institutional investors, which was fantastic to get that through, given the difficult period we were working across all businesses, really. We took an additional 2.1 million of loan from a specialist litigation funder to help support the investment in VW. And we got a loan of just over 5 million from one of our major lenders, Secure Trust Bank, backed by the government CL Bill scheme. So all of that positiveness and strengthening of the balance sheet and continued profitability has meant that on Friday, the board announced the proposal of a final dividend of 1 pence per share, bringing the total for the year to 1.5p in line with the prior period.
Thanks, Mark. Great set of numbers, and one of those rare AIM-listed companies paying a dividend, for which many congratulations. I'm sure your shareholders will be very happy with that. It's been a difficult year, as we all know, with COVID. Coming back to you, Alan, how have you managed the business through COVID?
Yeah, I mean, obviously there's been sort of inevitable disruption, but both businesses are exempt businesses under government legislation. So we've been able to operate almost as normal, subject to obviously COVID itself. But the business, as you can see from the results, has been highly resilient, to the COVID pandemic. We've actually also seen competitors who are typically high street solicitors and other hire companies pull out in the market or furlough all the staff and not trade. So, I'm not saying COVID has been good for us, but equally it's not been as bad as how many people have been affected. As I say, we've been highly resilient. And, as a result of COVID, there are inevitably going to be and are more impecunious people, which, is only good for the business in the sense that it creates more opportunities.
Well, I guess that is reflected in the results which Mark just walked us through, which are a cracking set of results. So thank you for being with us today to talk us through the results, looking back on a difficult year. Let's just look forward a little bit and kind of come to each of you in turn and just say, what should viewers, what should investors be looking out for? Mark, can I come to you first? In the coming weeks and months, what should we be looking out for from Anexo?
Well, there's two things really on each side of the business. Firstly, as we came out of our first lockdown in June of 2020, the number of opportunities we saw in the market increased significantly, as Alan suggested, from competitors withdrawing from the market. And we increased our vehicle numbers from just over 1,200 to a high of just over 1,900, whilst things were returning to normality. So we expect to see a similar trend coming through in 2021. Now we're all released and hopefully back in the offices and back to work. And from a legal services perspective, we can't wait for the courts to reopen. Many of our cases go to court to arrange settlement with the insurance company and their legal advisors. And with them being closed, that's really impacted the level of cash that we can generate from those settlement cases. So assuming that happens towards the mid-back end of this year, should have a hugely positive impact on our results for 2021.
Alan, concluding remarks, what do you think we should be looking for?
Basically, the two parts that I would look at, the Volkswagen litigation cases. As Mark said before, we've got almost 15,000. There's a preliminary hearing at court in June, which will set out when the case is likely to settle or go to trial. And secondly, at the end of May, the whiplash reforms are introduced by the government, which will essentially mean, we're seeing it already, that high street solicitors are pulling out of the marketplace, which inevitably will result in more opportunities for ourselves. Although we don't do whiplash in the sense of seeking to attract it, a lot of these high street firms do whiplash plus a small amount of credit hire. But obviously, once they've gone from the marketplace, that means there's more opportunities for ourselves. So, very exciting, when that happens from the 1st of June onwards.
Come back and keep us updated on progress. That was Alan Sellers and Mark Bringloe of the Anexo Group. As I said at the start of the program, Anexo listed on AIM, a market cap of around 153 million, a ticker of ANX, and they've just announced their full year results this morning. Thanks for joining Blytheway Business News. Thanks for watching.